In this episode, we are going to talk about ICT kill zones. I will break down what kill zones are and how all the high probability moves take place within these kill zones. So let's get straight into it. The first thing I want to cover is that all the time shown here is in New York time, which means Eastern Standard Time. There is often confusion around daylight savings and how it affects the kill zones. So the way I personally avoid any mistakes is by double-checking my chart settings in TradingView. I make sure my time zone is set to Eastern Standard Time so everything aligns properly with the sessions I trade. Now, what are kill zones? Kill zones are specific time windows during the trading day where volatility increases. These are the periods where we typically see expansion, liquidity sweeps, and larger intraday ranges. Because volatility is higher during these windows, they are more ideal for finding high-probability setups. Kill zones are generally divided into three main sessions: the Asia session, the London session, and the New York session. First, let's look at the Forex kill zones. For Forex, the Asia session runs from 2000 to 0000 New York time. The London session runs from 200 to 500. The New York AM session starts at 700 and goes until 1000. Then London close runs from 1000 to 1200. Now when we look at indices, Asia and London remain the same. However, the New York session is slightly different. For indices, the New York AM kill zone runs from 8:30 to 11. Then we also have the New York PM session from 1330 to 1600, or 1:30 p.m. to 4 p.m. So, the key difference is in how the New York session is structured between Forex and indices. Now let's hop back into TradingView and look at some examples of how these kill zones actually appear on the chart. And I'll also show you an indicator that can help you visually mark these sessions so you don't have to manually track them every single day. So, what we're going to do here is go through a few examples of marking up some Forex charts manually. First, we'll mark the sessions ourselves so you fully understand how the ranges are formed, and then later we'll look at an indicator that can automate the process for you. The first step is marking out the Asian session, which runs from 2000 to 0000 New York time. I'll place vertical lines at those times to clearly define the window. Once that's done, I'll box out the actual price range that was created during that session using a blue box. This gives us a visual of the Asian range and where liquidity is resting. Next, we move to the London session, which runs from 2 to 5. Again, I'll mark those time boundaries and then box out the range using a green box. This shows us how London behaves relative to Asia. After that, we look at the New York AM session, which runs from 7 to 10 for Forex. I'll mark that with an orange box so we can clearly see what price does during that window. Finally, we mark the London close session from 10 to 12 to see how price behaves after the New York move. When we step back and analyze the full picture, you can clearly see the typical pattern. Asia accumulates and builds a range. London manipulates by taking liquidity from one side of that range. Then New York distributes, expanding in the intended direction. After that, London close often keeps price consolidating within the established range. This is the classic accumulation, manipulation, distribution sequence, playing out across the kill zones. So now that we are on the indices chart, let's practice marking out the kill zones for this instrument. Starting the same way as Forex, we begin with the Asia session from 8 p.m. to midnight New York time. Mark that time window and then box out the range that price creates during that session. That gives us our Asia range. Next, from 2 a.m. to 5 a.m., we mark out the London session. Again, define the time window and observe the range London creates. Now this is where indices differ from Forex. Instead of using 7 to 10 for New York AM, for indices we focus on 8:30 a.m. to 11 a.m. That is our New York AM kill zone for indices. And this is typically where we see the highest volatility because it aligns with the cash open. After that, we mark out the New York PM session, which runs from 1:30 p.m. to 4 p.m. Now let's continue this into the next day before we look at the indicator that automates everything. Again, mark from 8 p.m. to midnight for Asia, then 2 a.m. to 5 a.m. for London. After that, mark the New York AM session from 8:30 a.m. to 11 a.m., and finally, the New York PM session from 1:30 p.m. to 4 p.m. Once you practice this manually a few times, you'll start to naturally recognize how price behaves inside each session and how volatility shifts between them. Now let's take a look at the indicator that can help us automate all of this. We're here on TradingView, so the first thing you want to do is go up to Indicators and type in Killzones. You'll see ICT Killzone and pivots from TFO. Go ahead and add that to your chart. Once it's added, remove all your manual drawings so your chart isn't cluttered. Then double-click on the indicator to open the settings. I'm going to walk through these because I get a lot of questions about how to properly configure this. The first setting limits how many past sessions the indicator draws. If it's set to 3, it will only display the last 3 sessions. If you increase it, it will draw more historical sessions. I usually leave it at the default. Next is the time frame limit. This controls whether the kill zones appear only on certain time frames. For example, if it's set to 30 minutes, you'll see the sessions on time frames below 30 minutes, but they will disappear on higher time frames. That helps keep the chart clean. Make sure the time zone setting matches your TradingView chart time. For me, that's New York time. If your chart is not aligned, the sessions will be off. You'll also see a label size setting. This changes the size of the session labels. Personally, I prefer them tiny or completely off because I only care about the color coding, not the text. Now let's talk about drawing cutoff time. You'll notice session highs, lows, and true day open lines stop at a certain time, usually 1200. If you want those levels to extend further into the day, you can change that cutoff time to 1600, and they will stretch across the full session. Now we move into the main part, which is kill zones and kill zone pivots. This is what draws the session boxes and liquidity levels. If you toggle this off, the boxes disappear. We'll keep it on. I personally turn off the labels because I don't want extra text on my screen. I just assign colors to each session. I set Asia to blue, London to green, New York AM to orange, and New York PM to yellow. I also turn off New York lunch because I don't use it. Then make sure your times are correct. Asia should be 2000 to 0000. London 2 to 5. For indices, New York AM should be 8:30 to 11, and New York PM should be 13:30 to 16. Now about kill zone pivots. If you've watched my liquidity content, you know I focus heavily on session highs and lows. This feature automatically marks the session high and session low for Asia, London, and New York. These become important liquidity levels. If you want to remove extra labels from those highs and lows, you can disable them in the settings to keep your chart clean. There's also an opening price section. This lets you plot a horizontal line at a specific time. For example, if you want to mark the 8:30 open, you can input 8:30 to 8:31 and enable that option. It will draw a horizontal line showing that open. You can also add vertical timestamps. For example, if you want a vertical line at midnight for the true day open, just enable that timestamp and it will automatically place a vertical line at that time. Once you have all this set up, the indicator will handle the session marking for you automatically, and you won't need to manually draw the kill zones every single day. Take a look at this example of how the kill zones can actually be used in real time. We start with the Asia range clearly defined. Now as we move into the London session, watch what price does. London comes in and immediately sweeps the Asia highs. That tells us buy-side liquidity resting above the Asia range has been taken. After the sweep, price displaces back down into the range, and we get a clear change in state of delivery, along with an order block forming. At this point, if price is going to retrace back into that order block, I would expect it to act as a level of interest. From there, I would anticipate a move targeting either the Asia lows or the London lows, depending on how the session develops. Now as London continues, you can see that price does not immediately rebalance into the order block. Instead, it sweeps the lows and closes around that area. Since Asia lows have already been taken, The next logical draw becomes the London lows. As we move forward, price eventually retraces back into the order block and then continues lower exactly as anticipated, pushing into the London lows. That completes the first objective. Now we transition into the New York AM session, specifically around the 8:30 open. Here we can see an inverse fair value gap forming. That becomes our confirmation area. My expectation here is for price to respect that inverse fair value gap during the AM session and continue lower. You can see price reacts perfectly off that inverse gap and expands straight into the next set of lows. Those lows become the next target for the New York trade, and price clears them cleanly. Now moving into the New York PM session, we get a shift in behavior. We see the first bullish change in state of delivery within the range, along with an order block that remains unmitigated. At that point, I would want price to respect that order block and begin moving higher. And that's exactly what happens. Price reacts from that level and pushes up into the close of the day. So in this single example, you can see how Asia sets the range, London sweeps liquidity, New York delivers continuation, and then the PM session shifts the structure to close out the day. The main point I was trying to show in this section is that the highest probability moves usually occur during the kill zones. That is when volatility increases, liquidity gets taken, and real displacement happens. Kill zones are not just time markers. They help you understand the structure of the day. They can also be used to identify the power of three or the open, high, low, close framework of the daily candle. When you study how Asia accumulates, London manipulates, and New York distributes, you start to see that daily narrative much clearer. I will break that down in more detail in a future video. For now, let's hop back into the PDF and continue. The silver bullet is also based on Eastern Standard Time, just like the kill zones we discussed earlier. The main difference is that instead of focusing on a full session window, the silver bullet narrows it down to a specific 1-hour window inside those kill zones. Within that 1-hour window, I am looking for precise opportunities where price is likely to draw toward a liquidity pool or some form of resting liquidity. The idea is not to trade the entire session, but to focus only on that high probability hour where manipulation and displacement are most likely to occur. So instead of being active for multiple hours, the silver bullet forces you to be selective and patient, waiting for price to align with liquidity and give a clear setup inside that defined window. If you want to learn more about the silver bullet, check out my channel because I already have other videos explaining this concept. And if you want a more detailed breakdown step by step, let me know and I will make a deeper video specifically on the silver bullet. Alright, so that is the breakdown of the silver bullet and how it fits inside the kill zones. Remember, the key is not trading all day. It is narrowing your focus to a specific 1-hour window, where liquidity is most likely to be engineered and where high probability setups tend to form. Stay disciplined, wait for the window, wait for the liquidity, and then execute with a clear plan. If this helped you, make sure you like the video, subscribe to the channel, and share it with someone who is trying to understand kill zones and the silver bullet. If you want to connect with me, join the Telegram and Discord links in the description. And if you want to learn personally from me, check out the mentorship link below. I will see you in the next one.